So welcome to DeFi Dojo's community call. We do these every Thursday at 1 p.m. Let's start off with the state of the market, and then we can move into sort of the open discussion. So I don't know if Keith or Groot have done any macro in the recent days. There's clearly a lot to talk about, but whoever wants to chime in can, and then I'll talk about a few things that I've noticed as well. Or I can just jump right into it. So, Keith, are you talking? Because if you're talking, I can't hear you, which is probably an issue on my part.
I don't hear him anyway, so I don't
know,
think
like,
it's
I
okay.
I see his green light lighting up, which means like sound is coming from him, but I don't hear it, which is the weirdest thing.
Yeah.
Okay, well, clearly the biggest thing on the table right now is Luna and Terra. They shut down the chain, at least temporarily. They're right, yeah. Hopefully, it'll be up in a few days. I don't know what that will do for price action. Honestly, it gives them days to recollect and do something. If this is going to be their bid at collateralizing UST, fantastic. But I think that's going to take months. I don't see that happening in the near future. In the meantime, if you're on chain, well, we can sort of talk about what your best options are. If you have a lot of money still on chain, you could attempt to put it into another asset that's more stable. I do believe there are other stable options, but the slippage is going to be incredibly high. So you have to sort of determine whether or not that haircut is something you're willing to deal with, or if you want to take a bet on a longer term comeback on UST. As I've said before and in the chats, Luna is not something that I am long on. There is no scenario right now in which Luna appears to be a good investment to me. It is still hyperinflationary to attempt to regain peg, and as long as that is the case, it is incredibly bearish for Luna. So I see a lot of posts on Twitter about people buying the dip for Luna. I do not recommend this. I can't recommend this. It could go to fractions of a cent. We do not know. So that's where I'm at. So in turn, there's a few more things that I can mention. Hopefully you guys can hear me. One of them is I've done a bit more digging into some of the stable options we've been looking at. I hope that everyone got out of the Theta Nut stronghold for this week. Luckily, you were able to do that, right? We all saw that the strikes were going to get hit this week. So I took a 0.8% loss on that, as opposed to what I perceive to probably be around a 12% or 15% loss for anyone who kept that asset. So they're probably going to have to fix that in the future, because I don't know how they're maintaining the stables to play with those puts if anyone can exit when they want to. But yeah, I wouldn't recommend any options vaults until we get less volatility. This will be the first week that the friction Ethereum vault goes in strike, and I think it could be a pretty severe loss. I mean, not that severe. The strike was 2,300. The current value of Ethereum is like 2,000. So I don't know the percent on that. Like, is it a 15% loss? Not great. Not great. That's going to be a long time to recoup that. So I also looked at Pico. So Pico has this like really high APY on stables right now. It looks like 235, sorry, APR, 235% APR on Optimism Chain. You're effectively getting the revenue from people who are doing leverage. However, thank you guys for setting the Dune analytics on that. Currently, leverage traders are winning. And when leverage traders win, the investment goes down, right? Because you're effectively paying out the leverage earnings. When the leverage traders lose, you're getting the liquidation revenue and things like that. So even though Pico looks really great and looks kind of like a GLP play, I don't think it's viable until they rebalance their mechanisms or people are losing more than they're winning. So right now, I would not consider Pico a good investment. Bancor looks great. DAI is doing well. Right now, all swapping fees are hyperinflated because everyone's trying to get off of and onto different chains, trying to either escape into CeFi or get out of things like USDT. So DAI is doing incredibly well in multiple different places. Bancor is a cool option. I like it. I mean, you're looking at anywhere between like 5 to 15% right now. That's as far as stables go. Hey, that's a new uh, standard. It's not a bad one. Okay, so I know I've talked for a little bit. If anyone wants to jump in, they can. Otherwise, I can continue on.
Hey, I had a quick question, actually.
Yeah, go
Hi,
ahead.
everybody. Is anyone doing the Abracadabra, Stargate, USDC, or USD loop right now? And
Yes. So
um,
Jungle Book is doing that. What questions do you have? I can give you a little bit of information on that.
is it a good call? Do you think it's too degen right now?
Right. So you're effectively relying on Meme's peg. Now, Meme or Mim, however you want to pronounce it, is an over collateralized stable, even at the height of the Danny Sesta FUD. I think it only depegged down to like 97 cents. So my recommendation is do a liquidation at 93 cents. That gives you plenty of space, and I think that's what I would consider moderate level of risk. I wouldn't do 98 cents, which I've seen some people do. I think that's where Jungle Book is. I think he's going to add collateral to get that down a little bit because you're doing with USDC and MIM. Both USDC is collateralized uh, and institutionalized very well. MIM is over collateralized, so I don't foresee that losing peg. Uh, yeah, and at 3% leveraged 9 times. Okay, that's pretty good. That's 27%. Now the one bad thing about this now is that the gas fees are astronomical. So sure, there's plenty to borrow, but unless you're doing like a $10,000 investment, which at this point seems really risky, or 20,000 or more, the gas fees are going to eat up a lot of that original or initial APR.
All right, thanks a bunch.
All right, cool. Drew, I see you trying to talk, but I can't hear you.
Oh no, I'm not
Oh,
trying to talk. It
okay.
might be my wind. It might be the wind chime
I think that may have been it. Yeah.
coming in. I can
Yeah.
mute myself.
Oh, I couldn't hear it, so no problem. One thing I do want to mention, though, is that for those of us interested in doing shorts right now, there is a big difference between the short ETFs that you'll find on KuCoin in the trade or spot trade and the shorts on futures. Shorts on futures, you can get liquidated, and you can get liquidated really quickly. Short ETFs, you can't get liquidated. So I don't know, Gru, do you want to expand more on that?
Yeah, I would say that the ETFs are probably everything's really wonky right now. Even with USDT kind of not maintaining $1 recently, things have been strange. Charts haven't been accurate. And then the ETFs are kind of like not even close to accurate. So I would honestly stay away from those. And if you are going to choose to do some sort of leverage trade, stay with low leverage because the prices have fallen so far that now any sort of like AVAX at $70, if it went up $2, that's not nearly as big of a price change as when it's at $30 and it goes up $2. So the percentage change makes a big difference when the prices are lower, which is why it's more risky to leverage trade lower priced assets that move a lot. So as things come down, I've been switching what I'm trading to the assets that are still at a higher price point. So like I stay away from Phantom. As soon as Luna went below like $5, I just pretty much stayed away from it. Um, Even though that was still risky as hell then. So you just kind of got to be careful and take your wins when you see them. Don't hold and hope for more and get greedy. And if it hits your stop loss, just move on to the next one and keep tight stops. I'm looking for like one trade a day right now. So if I can get that one good setup and trade it and get it and get out, I'm done for the day and I'm happy with that. It's better than a red day. So, and sometimes a no trade day is better than a red day, you know? And right now things are kind of looking like we're starting to go sideways. So I kind of see us doing that for a bit to let the MAs catch up and wait for another setup to kind of get a sense of market direction.
Yeah, I think it's been said many times before that sometimes the best trade is no trade.
Yeah.
Yeah, to expand, I'm sorry. At first, the first 5 minutes you talked, I heard nothing. Discord doesn't particularly care for me.
Yeah.
So anyway, it all of a sudden started working. Anyway,
Great.
to expand on what he said, it's important to know that if you're doing an ETF on KuCoin or Binance or wherever, that is fully 100% supply and demand controlled by the centralized exchange that you're trading on. They can create or remove those ETF tokens as they wish. So if you want to do a 3S token, AVAX 3S,
Mhm.
and whenever KuCoin feels like it, they decide they want to add 50 million of those tokens and the price goes down, well, that's perfectly allowed. Understand that before you do that. They warn you up front that those are in and out moves. They don't want you to be in those long term. They're very upfront about that. Get in, get out is the idea. To expand on what Groot said, if you don't have a good looking trade, just walk away. No one said you had to do anything. Just like he
Right.
said, sometimes a no trade is a great trade because you don't. There's no rule that says you have to be doing something. Um, and when things look odd for you, well, then don't do anything. Just walk away, take a break, have a beer, have a coffee, and don't do anything. That's
Yeah.
the beauty of being your own financial advisor is you make all the decisions.
Exactly.
Awesome. Thanks, guys. One thing I do want to say, sort of like a piece of good news in this what could be considered a shitstorm, is that Crypto for Winners C4W did issue an email. Thank you. I think a few of you in the Discord pointed this out, saying that they're going to move roughly half of their USDT reserves to USDC. So I like this for two reasons. One, it reduces exposure to USDT, which I'm not particularly bearish on, to be honest. But it also shows their level of transparency and reactivity to the market. They could have done nothing. They could have said, hey, you know what? We chose this risky asset. If you guys get wrecked, well, that's on you guys for making the bet. The fact that they issued an email and did an update on their Telegram, I thought that was pretty cool to do. That doesn't necessarily mean it's lower risk than I said it was before. Still an undoxed team working, still primarily French and German. So you have some issues trying to find resources about them in English. But I just want to say that was a brownie point. They got a brownie point for doing that. Also, I think the founder is now doxxed. I don't know if you guys saw that, but they expanded the website. You can now click on, I forget what it is, but you can see the founder and check out their LinkedIn profile. I'll share that later.
Steven?
Yep, go ahead.
Yeah, something I wanted to comment on crypto for for winners. Yeah, it's not only effectively that I saw that the founder seems to be Dux now, but also they are located in Luxembourg in Europe.
Yes.
Luxembourg in Europe, it's actually a very small country, but where there is a lot of banks and financial institutions. It was in the past before they joined the European common market. They were in the same situation as Switzerland, so it's quite common to have that type of institutions located there.
Mhm.
And somehow, it's not that it brings me more trust, but it seems more normal somehow
Right.
where they are located.
It makes sense
for
for
the
them to
type
be
of
located
business they
there,
do.
given the type of business they are.
Exactly. Yeah.
Awesome. Thank you so much for that comment. One thing that I want to also say while we're sort of in this arena is that yield nodes is dependent somewhat on market conditions. So I think there's a non-zero chance that this week we see a less than 1% and potentially negative return on yield nodes. That's not to say we will see it. I'm just saying don't be surprised if we do. They said, if you guys watched the interview with Steve that I did, Steve was saying that they are sort of heavily reliant on Bitcoin's price action because the whole markets are reliant on Bitcoin's price action, and a lot of the trading, even though they own their own centralized exchange, is still done by bots. And bots are gonna bot. So do keep that in mind. I would not have high hopes for this week's returns with yield nodes. And then I'll close the loop with all of these types of investments. Freeway, like I said in a few times in the Discord, is supposed to release the audits of their 2021 financial reports that they shared with the NDA signers. So if they do that, that would give me a huge vote of confidence, and I would share that with you guys immediately. Bless you. And then I may increase my investment if they get that audit done. I just wanted to let you guys know. Also, I am switching all of my Ethereum investment on Crypto for Winners to USDT, and I switched all my Bitcoin investment on Freeway to USD. So I am trying to get risk off entirely at the moment. At least my market exposure. I'm trying to be market neutral. Hey, Kev, good to see you here. Wave Rider, cool.
Yo, what's up?
I like the amount of 48s you have. Yeah, go ahead.
Is anyone preparing for the Ethereum merge? And if so, what are you doing?
This is an excellent question. Go ahead.
I think you're talking about the thirding that's going to happen, which is awesome. I think that will positively affect supply and demand. What am I doing? I've been stacking stables, waiting on any kind of bullish reversal on any chart, and I haven't seen that in quite a while. So I think that would positively affect supply and demand, and when that happens, we will see an effect on the chart based on that. So I'm not going to do anything until I see that. I will say that some Ethereum based coins that I've looked through this morning have pretty good buy pressure on a higher time frame chart, like a weekly. I posted one over there in the charts area. Gala has a 60% wick right now, which is awesome. That's good buy pressure. That shows me that bulls aren't totally quitting, just that the bears are in charge and that the bulls are getting theirs when they can. And I think eventually, as Groot kind of said, we sideways and crab back here a little bit. This is far too much capitulation and far short of a period of time for this to be sustainable. No different than if it went up this fast. It will come back down, and if you go down this fast, you will come back up. That's just the mechanics of the market. So to answer that question on Ethereum, I'm fully prepared to buy, just not yet.
All right, and then what's the best place to stake Ethereum, and what's the best place to stake Polygon? The highest APYs you guys seen?
So there's a question. There's two questions that need to be answered here, right? One is like, what's the highest APY to stake these assets, and the second is, what's the safest place to stake these assets? And the answers are not going to be the same. So like staking Ethereum safely, you're probably the answer you're probably going to get from the vast majority of the community is Lido and Lido aggregators or Lido compounders or Lido leveragers. But effectively, Lido becomes the answer. Lido Rocket Pool is another good one. But effectively, like you're staking for validation. To validate to validate transactions on the blockchain, and you're going to end up anywhere between like 3 to 9% if you're doing the leveraged Lido. But that's going to be like the go-to staking for Ethereum. For Polygon, you'd have to ask someone else. I have not particularly staked Matic anywhere, but then there are like riskier and riskier ways to deposit Ethereum and to deposit Matic and get higher yields. If you're looking for that, we just talked about Freeway. We just talked about Crypto for Winners. Those offer 45% and roughly 60% respectively, but at much higher risks, in my opinion, definitely much higher risks than Lido. And also you're not staking for validator rewards. You're staking so they can go out and use your money to trade. You may also be interested if you're interested in the Polygon chain, you may be interested in CX Ethereum pool. That's Celsius's Ethereum wrapped Ethereum and the wrapped Ethereum on the chain. And you can get, I believe, 10 to 12% APY on Beefy with that. So that's another place to get a decent yield on Ethereum at the moment.
Hey, Steven, how much STETH do you get back? Is it 100% or did they give you how much from Lido?
I don't fully understand the question.
So you stake with Lido,
Yep.
And they give you stake ETH back, STETH. Do you know, did they give you 100% or 70% or?
Oh, this is a great question. STETH, to my knowledge, and someone else can correct me here, is not an interest-bearing token. You actually get more STETH over time. I think that's why BETH could function. I'm not sure, so anyone else who knows, who's used STETH before, can chime in. But that is vaguely what I thought was the case. I'm not sure. I know CJack has played around with STETH, but I don't know. If it is interest bearing, then I think at this point it would be like 4%. So you would just get like 4% less STETH than ETH. But the value of the asset would be this, like the value of that STETH would be equal to the value of your ETH.
Best stablecoin farms on Avalanche. What do you guys have?
First, I want to give anyone a chance. Does anyone know the answer to the STETH question? I am not currently utilizing STETH, so I don't know. But if not, I'll look into it and I'll try to find the answer for you.
I can't explain it correctly, but it's
Thank you.
yeah, it's you gain it internally within the coin. Coin goes up and down.
Okay, so it's interest bearing. So it's an interest bearing token, which means last time I checked, it was like 1.004 or something like that. Which
I
effectively
think for Avalanche, Banky is good at 7.2% APR. It's safe right now.
Thank you.
Yep.
Thank you.
So
Yeah, so 7.2 APR, that's like 15% APY if you want to break that down, right?
wait, 7% APR?
Yeah, 7.2% APR is what Banky pays.
Okay. Yeah, so that would be probably like 9 to 10% APY, which that's pretty good. And that's on Banky. That's also a good place to stake your AVAX. You're breaking up a little bit, unfortunately, Kobe. Okay, so the next question was what? Something about stablecoins on AVAX?
Yeah, best place to like park stablecoins and get a good yield on the AVAX blockchain.
There's an argument to be made for Vector and Platypus. I know a lot of people have successfully utilized that. I personally have not. What is a good yield on stables now is really a growing question. At this point, it seems like 5 to 15% is a decent yield. But do you want to be exposed to DeFi for 5 to 15% yield? Well, that's going to be a question that we're going to have to struggle with in the next few weeks. Like Yeti Finance, right? Yeti Finance has, I believe, last time I checked, it was around 7% APY. Now that can be boosted by staking the Yeti token, but the mechanics of the boost are unclear.
Yeah, yeah, 7.2% APR on Banky seems a bit, honestly. But what I read today also about Avalanche was that there is supposedly a coordinated attack, is what is being talked about on Reddit right now. There's going to be a coordinated attack against Avalanche also after Terra, but probably I don't know.
I don't doubt it. Like we saw Phantom, we saw Solana, we saw Terra. There may have been other chains that have experience, other less known chains. Solana, I think I already said. It wouldn't surprise me if AVAX was targeted. I don't know how AVAX would be targeted. I guess there are plenty of different vectors. But yeah, I mean, at this point, just have low exposure to any volatile assets. We've been saying this for weeks now. Don't have exposure to tokens as they go down, right? Wait for them to be on an uptrend, then buy them on the way up. But yeah, other places. Go ahead.
I bought 1,000 AVAX for $28.
Hopefully that works for you. Hopefully that does well.
Now.
Man, I'm sorry. Your audio is not holding up very well, unfortunately. Other places you can go ahead. Yeah.
Wait, Stephen, yeah, feel free to finish your thought. But I just wanted to, after that, I mean, I think we should talk about the stables that people feel safe in right now, where we should put those. I see that Day, of Day Use Finance, that's collateralized, but I mean, that's been shaky after hacks and over the past.
Day is
couple days,
collateralized. I believe Day is partially collateralized. Like
partially collateralized.
Yeah.
I think it's like 90% collateralized or something like that.
It's a Frax fork. I believe their target was like 85%, but it might be 90% at the moment. Go ahead.
Right. So right. I mean, I have some exposure to that, and that's not been doing very well. But I think probably just pertinent to discuss what stable coins do people feel confident in right now? As we're seeking some refuge.
Sure, absolutely. I'll let other people chime in on this, but I'll just give my quick thoughts, which is collateralized and over collateralized stablecoins are where I have the most faith, and the ones that unfortunately have $50 billion BlackRock backing, USDC, Circle, are probably the ones that are going to be like the safest in terms of volatility of the stablecoin. Uh, so like if we just want to talk like list of over collateralized stablecoins, you have MIM, you have DAI, which is collateralized and over collateralized. You have um, which is over collateralized. Anything that has AI at the end is like Pi on Solana. Is another over collateralized stablecoin. Um, then there are, I think, correct me if I'm wrong, but I believe LUSD is not only decentralized but also collateralized, which is cool because it gives us a decentralized option. The ones that are partially algo, partially backed, are like we talked about OUSD on the Astar chain, so that would be maybe one that is not quite as stable. You have Day, which is a Frax fork as well. Then you have Frax, which is Frax. All of these are partially backed, partially algo. The partial algo trunk as well was not necessarily partially algo, but it was backed by hard assets and then backed by a softer asset. And so all of those have that portion of peg that is vulnerable. And I think we're going to see those vulnerabilities be tested in the next week. So if you're looking for a safe one, you want to look for over collateralized. Now, basically, over collateralized stablecoins are most frequently found on like borrowing and lending platforms, really big ones, where you will add collateral and mint their token against it, and then when you're ready to get your collateral back, you burn that stablecoin and get your collateral back. That's how the stablecoin always stays over collateralized. Uh, Pax is another one that's centralized but collateralized. But does it,
One thing that I kind of want to add is about stablecoins is it's going to be really kind of uh, crazy to watch what happens during this bear market with all of these different stablecoins. For one, the one thought that comes to my mind is I know that the government and other governments have already created their own central bank stablecoins, right? And I know that the U.S. is planning on doing that. Now, it's a conspiracy thought that I have in my head, but if they want their stablecoin to be successful, they're going to need to make good reason why theirs is better than the rest that already exist. And so there could be these, coordinated attacks happening, by whoever. But conspiracy thoughts in my mind say it's probably the powers that be that want to create the central bank digital currencies. So I would just say be really careful. Um, with anything in a bear market, even stable coins are not safe.
yeah,
I agree with.
Mhm.
I think the U.S. dollar is the strongest it's been since the 70s. Right now, the strongest. I mean, I don't think we see
Yeah.
that in the world, but the U.S. dollar is the strongest it's been since 1970. And the Trust Act was signed last week, and that's a specific, in my opinion, target against stablecoins. Like Groot said, I would be very careful if you're putting in stablecoins, in my opinion, right now. But
I was charting the U.S. dollar this morning. It's the highest point since 2002, pre 9/11, when it was at a peak in 9/11 of $1.20. The next highest point behind that was 1984 when it was $1.64. It hasn't been that high since then. It's the third highest time in history for the U.S. dollar. It previously broke highs of JFK era, 70s era, post Korean War era. That being said, this isn't going to last. All the indicators are getting really high. The dollar will eventually trend back down some, and I don't think that's anything to do with economics. I think it's just the fact that everything that goes up must come down some, and everything that goes down will eventually come up some. I'm not saying that the dollar is going to go way down, saying that it's probably supposed to be more near $1. The way they treat the dollar kind of hinges on the petrodollar, and there's a lot of stuff going on in the world right now involving the petrodollar. So if we see something change with that, things will get wild. I don't think that's any time in the future. I think currently the US dollar is about the safest bet you have, and it will continue to be for at least another decade. Um, I don't think that's going anywhere. I love crypto, don't get me wrong. Anytime the government touches anything, it's never good. So I see a lot of people hollering for government intrusion, government interaction. That will not fix anything. Please don't think it will. All you're asking for is people in black suits to tell you they know better. Um, I've never, I've never had that be a good thing for me. I love the Wild West aspect that we have of crypto, and I want to see that go away. It will eventually. I think what like Root said, they have their own stable coins. Don't think they're behind on this. They're not. It's only a matter of time for that changes.
One thing I want to do is like put on my tinfoil hat for a second and just mention that we do have like there is some suggestion that we had Citadel interacting with this Luna event, and we also have BlackRock, which has a $50 billion fund of USDC, and you also have Coinbase, which is a member of the WEF. So all of these things may give you pause when holding the assets and hoping for any sort of decentralization or I mean it's unclear what BlackRock or the WEF would want for USDC if there are other governmental stablecoins in mind to replace it. But that said, I still think that USDC is the current safest stablecoin. But if you want to be even safer, of course, you can be in USD on the sidelines for a while, or you can take a long-term bet on crypto and be in something like Ethereum or Bitcoin or Ethereum in a hardware wallet. But that's you're making a long-term bet. I saw it said that it's like a safe haven. I think Keith has already disputed this point. I would not consider Bitcoin and Ethereum a safe haven. I would just say it's a long-term bet on crypto.
To bounce off what you said, I don't hate that idea. Don't get me wrong. What I mean by I don't think it's a safe haven is if you lose 75% of your value, that wasn't a safe haven. Does it mean it's going away? No. It'll probably be around. I think we've established that Bitcoin is going nowhere. Will it lose a lot of value? Yes, it will. Will you have been able to save a lot of that value by not being in it and waiting and then buying it at a much, much better price point? Yes. That's up to you. And I can't change anyone's opinion on that. But I don't think they're going away, to put that in perspective, as far as what I think a safe haven is. I don't think they're going away.
And this is go ahead. Go ahead.
No, please finish your thought.
All I was saying is that to contextualize this a bit more, for those of you who were around since 2017, I think 99.5% of all assets in crypto trended towards zero or approximated zero between 2017 and late 2019, 2020. So to say that like these two are going to stay around, well, that's in the context of the vast majority of tokens presumably going to zero throughout the bear market. So
Yeah, thanks. I kind of have a couple of just trying to get a sense of risk here. The stablecoin thing, I mean, for me personally, yeah, I've moved into USDC and some cash, but I just don't see the value in holding stables short term until we see the fallout. I think unfairly, other dominoes could fall just by association. Maybe, I hope not, but that seems just risky to me right now to be thinking about getting a couple weeks worth of DeFi yields as opposed to just sitting it out for a couple of weeks and seeing what happens. But, that's my thought on that. But, hearing you talk about USDC, I'm having a hard time, trying to figure out, because on one hand, I want to have some money in stables on the sideline in case we do get that Bitcoin and ETH buy opportunity of the generation in the next couple of months. Everything that I've heard up to this point is like, I wish that I had bought more during these times from people in the past. So I'm a little confused because I understand that short term, looking at these charts, you're not getting a buy signal right now. But I mean, at some point we will probably, right? And then how long? I mean, when I'm following the chart stuff, y'all have been right, but I don't know. I mean, are we going to have like months to layer in once things change, or is it going to be like super fast where y'all are like, this is the buy signal, and if I'm not watching the Discord that day, I'm going to miss it?
It took Bitcoin 3.5 months to rebound from $3,000 to $6,000. You had plenty of time. I look at
Yeah.
everything long term first. Everything long term first. Bitcoin has been trending down for 6 months. Ethereum's been trending down for 5 months. Ethereum hit $1,600 earlier yesterday, I believe. That was down 75% from its high. There was your buy of a lifetime. 75% rebate. You're not going to get much better than that unless you try to buy Luna right now at less than a penny. That's a 99.9% rebate. Like, we have to be careful on what we consider short term. Short term would be 4 hours. All right. Anything past daily is long term. You may take, like, I don't expect anyone to follow this stuff tight, like you're saying. I think that's, a bit irrational. But if you can look once every 3 or 4 days, you're going to get a fine time. You may lose 5, 6, 7% waiting, but that's within the margin of error most of the time. And I'm okay with 5 or 6% to de-risk and not take a humongous chance. That's important to understand. The high time frames kind of run the show. And we're seeing that now. The last bear market was 2.5 years. We've been in one for 6 months. This could go very, very long. As well, things could be exaggerated. And I don't want people to miss either of that. So only thing I can do is say what we have right now, which is a very hard capitulation. And that capitulation will eventually result in a rebound. That rebound could take weeks, months, or a year. And I don't want to crystal ball it because I think that's not real. So we have to go by what we have now. I see prices 45 or 55% from the AEMA on a high time frame. That is going to change. Either that thing's going to sit still or it's going to come back to the AEMA, one way or the other. That's just the technicals of it. Unfortunately, a lot of people are thinking now they should sell. Well, it's already down 75%. I think that's the question you have. If it's already down 75%, why would I let it go now? And that's a super tough call. Everyone's got to make on their own.
No, my question is, I'm sidelined right now, and I want to put a big amount into Bitcoin and ETH when the time is right.
Right.
I want to. That's the first bet I want to make. And I've already see other investor friends saying like, "Oh my gosh, I'm dollar cost averaging in because the biggest mistake I made in 2018 was not putting more in," and that's exactly the opposite message that I'm getting from y'all. And I listen to y'all more.
The investor,
but I'm just wondering, like who's right, and do you have a? I mean, I know you're right, but will there be a chance to dollar cost average in, or are we going to look for like strong buy signals at certain support levels or resistance levels when it happens to make bigger buys?
The second part is important because you said buy at the correct levels, which we aren't at yet. We're at one of them, but there are more. So if you're going to dollar cost average, just do a little. Don't go crazy. Number two, you said that your friends are wanting to dollar cost average. You don't dollar cost average on a downtrend. That's how you lose more money and then more money and then more money. And you continuously try to buy the bottom of a never ending bottom. So if you'll wait for the uptrend to start and then dollar cost average in, then you're far less likely to lose money. We do not have any semblance of an uptrend right now. It's excellent to try to catch the knife right as it hits the floor. I get that. Don't get me wrong. I want to buy right now. I have zero confirmation. I am just like you. I have money sitting on the sideline. Man, I want to click the button really freaking bad right now. However, there's zero confirmation. And I simply can't break from the principle of, you better wait, Keith. You better wait. You better wait for confirmation. Do you want to take that stick right up the rear end here, or do you want to wait? Right? And I can't do it. I learned my lesson last time. The last time I got smoked because I listened to people who I thought they knew what they're talking about, and the data insisted otherwise, and I refused to listen. I'm not going to tell anybody what to do, right? I want you guys to make your own decisions. For me, I'm not doing anything without confirmation. Zero. I don't care what anyone says. Until that chart changes, I'm not doing anything. I can't. I just can't. I can't. I don't care if Groot comes over and smacks me in the face and says, Keith, it's time to buy. I'm going to say, I want to see the chart first. I can't do it.
Right.
Well, I'm
So
not going to
so
tell
the
anybody to buy without having some evidence in the chart. And I was just looking at the Ethereum chart, and because you're asking like, when do you buy, right? If you go back to the weekly Ethereum chart and you look around like August, the end of July, August of 2020, that was the buy signal on the weekly chart, and you can see
Do you
after
want to
that
share your screen
day
to show
how
that,
many.
Root?
Yeah, so I'm on my mobile, but I mean,
Okay.
I'm just kind of
I can
I'm outside because
I can pull it up.
I mean,
Oh, Keith's got it.
okay, yeah, pull it up. Keith, you got it. So if you look at that, we had a massive volume come in there, and that is when it broke the channel that it was trading in on the weekly for a very long time, and it broke there, and then you had a downtrend afterwards, but it was still the buy signal there. Even though it went lower than where you bought there, you can still kind of just hold that and dollar cost average in after that point, and even get a better entry afterwards. And you can just see how much time you had after that to get in. Like, there's plenty of time. There's no rush to FOMO into anything ever. If you find yourself FOMOing, there's a 90% chance you're going to lose. Like, it's just how it is. There's going to be plenty of warning to get in, because the only way it's going to go back up is after big money has established their positions, and it takes a very long time for them to position themselves to where they want to be before they'll let it go up. And all they have to do is stop selling, and then they let retail bring it up, and then they'll wait until they like it, and then that's when they start the distributions and start to get out.
So to compound on what Groot just said, I got the chart pulled up right here for you. In in April 27 of 2020, you had an 8 EMA, 21 EMA weekly cross. From there, you had weeks, 1, 2, 3, 4, a solid month of sideways to make a decision. On a weekly chart, you had a solid month to make a decision. This is where you dollar cost. This is where you dollar cost average. This is where you start. I want to buy a third of everything I've got right now, or whatever you want to do, half of everything right now. If this goes down, I've reserved half to buy more. If it goes up 10%, I've already made a decision. I'm putting the rest in. I only lost 10% waiting, and now I'm fully in, confirmed, versus I've got half ready in case something bad happens. I can buy more if I want to. This is a strategy you have to develop on your own. Everyone's got a different dollar amount, so it's hard to tell anybody what to do specifically percent wise. Everyone's going to be a bit different. If you've got $1 million, well, you can throw 30 grand at something and not be upset. Well, if someone's got 10 grand, $300 to them is a big deal. So you have to understand that percentage wise, everyone's going to do something a little different here. But you had plenty of time. I mean, even this, when it broke into this new move here, and really June or July of 20, like he said, it completely broke the uptrend. You had 2 or 3 weeks to decide go or no go, even then, and then all up from there. I mean, you missed a few percent, you missed like 15%, and then you end up making, I mean, that's 827 just on the screen, 1100 just on the screen, and it goes up farther than that. It goes up about 2300%, 2200%. Yeah, 2200%. So you missed 10% and you made 2200. Not worth the worry.
And then just zoom out, and you can see how long it took from the fall of the previous
Correct.
bull market to get there.
Here's
You
a
know,
quick little
that,
trend line for you right here. There's a quick little trend line for you. As you see, it failed and failed and failed, and then finally broke. And it finally broke. And when it broke, you had all the time in the world right here. You had weeks to make a decision. No big deal. No big deal. No one's got a rush to do anything. You have all the time in the world.
And one thing to point out here is if you look at that first fall and then that, maybe you call that like a sucker's rally or a fool's rally, you can see like if you were DCAing on the way down, you would just be losing enormous amounts of money until months into the new bull market.
Let me highlight that with some arrows here while y'all are talking.
Mm-hmm. Yeah.
And
so,
meanwhile, your capital being used to trade the market in its in its pattern that it's trading in, instead
Right.
of just having your money stuck in something that's losing money.
So you could have been
So here's
exactly. You could have been
1, 2,
shorting the
3,
market the entire
4.
time. Go ahead.
Here's 6, 7 buys. You could have just bought all stable coins here and waited until you got a good signal and then bought one time.
And you would have made
Instead of
dramatically
buying
more.
9 times, you'd have made far more by just waiting to buy one time instead of buying 13 times.
And
Not
far
only
less
that, it's so
stress
much less
watching it.
stressful. So much less stress.
Yeah.
So much less stress. You have zero stress now. You're just relaxing, having a beer.
However, if you are not confident in market indicators, if you find yourself for some reason abandoned by TA, or you don't have access to technical analysts, then DCA is a strategy that you can use on a bet that it'll eventually go up higher than it is currently. It's not
agree.
right. So it's not like that. This is the only strategy to use, but it is a technical strategy that average will perform better, and it's using indicators rather than just I don't know how to
You're
phrase
talking
this.
about some of
No,
you are asking
thank you.
about crypto for winners and freeway. You're paying them to do what I'm showing you.
Mhm.
Put it that way.
Something I wanted to add about DCA, because I did a lot of benchmarks about DCA. The only DCA that we recommend will be maybe for my little sister, if she has $100 to invest monthly, is to invest to DCA on a time pace. Just on a regular pace, you invest $100 and $100, and your term is what it's like 10 years. You can be sure that in 10 years, investing $100 a month, you will probably be a winner. But DCA, when the market is falling, unless you have very deep pockets and you are ready to maybe lose some money, then yeah, I would not recommend that either.
Well said.
Thank you. That was a really great explanation for those of us that aren't that far along the path yet. So good examples, everyone. Thank you. And I think by being in this Discord and by being in your Discord, I'm convinced that even if we're not technically where y'all are at, we'll get plenty of signals from everyone when it is looking like a buy time in the future.
I've learned
So
interestingly enough, what you just said, something I've learned over time is that if you're around like-minded individuals whom all have a common goal and that goal is a positive goal, you're going to be fine. If that goal is an inadequate goal or the wrong goal, then you're in trouble. However, we refuse to surround ourselves with people who are what I like to call degenerate, right? We refuse to be around those people. And when you surround yourself with people who are smarter than you, you're going to get smarter. And I don't claim to be the smartest person in the world. Steven is much smarter than me. I want to be around him, if that makes sense.
Steven's a freaking genius. I don't really understand
This,
how his brain works, but I
this
You
really,
is
I
can't
really
have
want
hair. If you got so much brain, you can't have hair. It's a fact.
to.
well,
grass
well,
doesn't grow on busy streets.
last thing I'll say. Last thing I'll say is that maybe I'm not. It's a very weird to wake up at this time and not know. I'm so used to doing DeFi all the time that I feel like I've lost something.
Mhm.
And as you guys are talking, I'm feeling like this might be the perfect time to make learning technical analysis my new passion project, because it sounds like there's just not going to be a lot of decisions to be made in terms of buying and DeFi in the short term right now, at least for me, you know?
Yeah, I
Feels
mean
like we share a
it's like
brain,
adding
but I
another
feel the
tool
same
to
way.
your tool pouch. Like you want to have more tools in your tool belt. To be prepared for whatever job needs to be done.
Yeah,
And when the
improve your
market cycle
skills.
changes, you pull out that tool. And so that's what's so great about having this many people in one place who have all of these tools that they can offer to everyone. And teamwork makes the dream work. So when the time comes to pull out the next tool, we'll be ready to pull it out. So
Yeah, I don't know if any of you guys are familiar with Sloppy Mechanics, but I like that YouTube channel because he takes junk and makes it go fast. And I like that. So anyway, what he says is not going to be totally specific for here, but he says if you just put an hour a day in the garage, your project will get completed. Well, obviously you can't spend, not everyone's got an hour a day to learn how to chart. But if you spend 10 minutes just looking and asking one question a day, 10 minutes, you're going to get smarter. That's simple mathematics, okay? The more you try, the more you will succeed. Yes, you will fail. Everyone fails. Welcome to the real world. Okay? I don't care who you are, you're going to fail. You simply must use it as a learning experience and not use it as a heartbreaking experience. Remember, none of these assets care about y'all. Okay? So understand that you cannot care about them. They don't care about you. They want you to buy them, and that's it. You have to learn to breathe and take it all in.
Hey, Stephen, for those of us who don't really believe in TA, what happened with USDN? Do you know what happened there? And also,
USD, yeah, US.
Tether,
Go ahead. US,
and also I saw Tether went down to like 92 cents.
right. USDN is similar in function to UST. So it was exploitable by virtue of not being backed. Um, it regained peg temporarily and then went back down again. There are much better write ups than I can explain about this. I believe Oxham has the best write up on waves and how it was going to fail, and sort of called this failure long in advance. If you want the write up on that, then you can send me a message. I'll send you the link to that tweet, which sort of predicted the fall of USDN and waves. And then is Tether below 99 cents right now?
Last night it went to 92, but it recovered.
Yeah. Right. Yeah. So the way Tether works is like you can redeem Tether for USD value, but you have to redeem in chunks of $100,000 or more, and so it takes a while longer to regain peg. Keith, what is it at?
99 cents.
99 cents. Okay. Like I am will. This is a risky thing to say given the current environment, but I do not foresee Tether failing in a similar fashion to USD. And the reason is because it is backed by some amalgamation of assets, whether they be bonds or paper assets or this or that. Additionally, virtually every single exchange that exists uses USDT as the de facto pair. So the liquidity is deep, and the use case for it is amazingly greater than UST's use case. Amazingly greater. Anchor was a point of failure, right? Anchor had the majority of all UST that existed. That cannot be said for USDT. USDT, again, is the primary trading partner for virtually every single asset on every single decentralized and centralized, sorry, not decentralized, every single centralized exchange. So, I don't know if that doesn't answer your question. You can do a follow up, but that's what I have on that topic. As a side, I will not be touching USDD despite its attractive APRs.
Thanks.
Mm-hmm.
Yeah, for real quick, for anyone who doesn't understand technical analysis or doesn't believe it, if you have a question about it or if you want to know more, just ask me. I'll try to get back to you in DMs. I'll get back to every single DM that's sent to me, whether I like it or not. I'll get back to all of them.
Also, one thing
I'm
you
more
can
than
do,
happy to talk to anybody about anything. So
one thing that I want to mention is I had an astrologist reach out to me to try to give me predictions on tokens and coins, and so the first thing that I did was, okay, cool. I'm not going to dismiss you because that's whatever. This is kind of fun. Give me a prediction. Let's see if this is testable. Let's see if you can give me a prediction today and for the future, and I can test that. Right? This is science. We can do science to see if this is valid or not. I encourage all of you to do the same thing with TA. Test your hypothesis. Take the tools that are being expounded here or being proposed and test them scientifically. Do it with paper trading. Do it just with math, right? Just write down where you would buy, where you would sell based off these advice. Do the science. Learn for yourself. Is it all nonsense or does it work? Right? You can test these things. There's no reason to have a belief when you can have knowledge based off of research. And the astrologist was wrong, by the way. The astrologist their predictions did not pan out, unfortunately.
If I just can say one thing again, because I will repeat every time, but I think it's the most important thing. It's what turned me into a winning trader. It's really, if you have to improve one skill now, while we are just looking at the market and waiting on the sidelines, is to learn risk management at every level. I mean, that's my portfolio. I invest in stocks that amount. I invest in crypto that amount, and then you subdivide your portfolio crypto amount. That's what I will invest in trading. That's what I will invest, and so on. And then at the end, you have a clean view on the amount of money you are managing and the amount of risk you are putting in what part, and see if the risk is correctly balanced. Something that Groot, at least here, or Keys do not speak a lot, but every time they enter in a trade, they systematically they are used to it, but they don't speak about it because they do it systematically. They are trading for years, I think. They always see the amount of risk they take for the amount of profit they will be doing in the trade. And it's not because they see it's a winning trade. It's if it's a winning trade with only one chance, you make $1 profit for a risk of $1 lose, they will not take it. They will only take that trade if they will be able to make $3 profit for $1 risk. And maybe even less, probably. I don't know.
Perfectly
But that's
said.
but
Exactly right.
so you must really first skill you must improve, learn, read about risk management in whatever investment, trading. First skill to improve, then move to TA and start learning. And you can, I think, thanks to crypto, you can start even trading with real money, but for very small amounts, because I consider that uh, trading with real money is completely different, because your feelings will enter into play, and that's the major risk when you trade. It's your feelings, your beliefs. You should not believe, you should not feel, you
Rule
should
number one.
just execute your plan. So uh, and again, because you need a plan, you need the risk management. So meaning that if you do not start by risk management, you will fail in trading.
Agreed.
Yeah.
TA, and the last thing I'll say here, TA is not just about charts or assets or trading. It's everyday life. Technical analysis is in everything you do. Nothing different than driving through a stoplight, using stairs, going up an escalator. Technical analysis is used for literally everything we do in life. How many people go through the drive-through, how much they charge the customers, how much they pay the employees is all based on technical analysis. This isn't me talking. This is the data talking. And I want you to understand, anytime I type something, it's the data talking.
And to compound on that, everything in the entire universe follows a Fibonacci pattern. And so
Exactly.
if you don't believe that, just go look around. I have pineapples that I'm looking at growing in my backyard, and they follow the Fibonacci sequence. When I look through my telescope in my backyard and I see spiral galaxies, they're following a Fibonacci sequence. So it doesn't even have to be alive to follow the pattern. And so human behavior follows this pattern instinctively without knowing it. It's not lines on a chart that people are saying, okay, everybody's going to communicatively sell or buy at this point. Before algos and bots were even in existence, if you go back to the charts way back in the day, they followed a Fibonacci pattern. Why? You couldn't even look it up on a computer. You can only see it in the newspaper the next morning. But they followed the pattern because human behavior follows that pattern on its own, naturally, because
Extremely well
everything in the
said.
universe follows it.
And now it's
This is
compounded by
Extremely well
really
bot
said.
this
behavior.
is really
Go ahead. Banker, go
uh,
ahead.
I was well, two things. The first one is
Oh.
Stephen, you alluded to on our call the green and the purple. And forgive me if I missed this earlier. Is that the 8 EMA 20, the green crossing over the purple line in that graph?
Yes,
EMA
that's
21. Yeah.
EMA 21 MA. Yeah.
821. That's awesome.
EMAs,
So
yes.
I'm gonna
Exponential moving averages, correct.
I'm gonna be joining your Patreon when I get back from Florida because that's pretty sweet. Because I'm just looking at the two candlesticks over and under, and on that one rise. The second thing is regarding the TA. I thought it was like reading tea leaves. Full disclosure. I'm actually looking at a book in front of me that I picked up years ago that I pulled out called Sticky Stock Charts. It's like children's technical analysis. So I pulled it out just to read through it. But yeah, it all goes to testing. If my portfolio in DeFi versus the TA guys, even if it is reading tea leaves, Steven, you said something to me that resonated was a lot of there's so many amateur hours coming out as gurus, right? TA gurus. So you get lost in the noise. So you got to talk to people that actually know what they're doing. And the recommendations of the gentlemen that are on this call that you recommended, man, I mean, it's really simple. Are you profitable? Or are you not? Yes or no? And in a bear market, that is the true test. I looked like a rock star. I was talking to all my friends how amazing DeFi is, and I got absolutely bent over on Luna. Lesson learned, but it was a 5-figure loss. But you feel like a rock star genius when you just put money in any protocol and you're making money. But in the bear market, when Steven told me you reverse it and the DeFi players look at the world upside down in the bear market, it just opened my eyes that this is definitely something I need to learn. And yeah, everyone's different, but man, oh man, why not take opportunity? If there's dollars on the floor, reach down and grab them.
Thank you for saying that. I have to go because I have a meeting right now. But Shibumi, I think you were trying to say something, and then I thought it was ex banker. There was someone who was trying to talk, and I cut them off. Do you want to go ahead and talk before I head out?
Hey, this is Wave Rider. Real quick, Steven.
Go ahead.
So then the resources that we have access to in order to learn that technical analysis. I mean, obviously, I'll come here. Any just 2 resources I should start with?
So that I will leave to Carolina Keith and I am Groot. I'm gonna head out and go to my meeting. But as always, thank you guys so much for being here. This was great. I genuinely appreciate it, especially the positive energy given this current week. So thanks again. I'll see you guys next week.
Thank you.
See ya.
Thank you.